Hello and assalamu alaikum, boys and girls. Um, it is our first class of performance and performance management, PM. Okay, cost and management accounting is our first area. If you guys have any question, uh, you can WhatsApp me on +923021777706. Also, if you want to be a part of accountancy ACCA Global Community WhatsApp group, you can WhatsApp me on this particular number and I will add you in the group. Okay. So first thing first, what is management accounting and what is financial accounting? Management accounting is concerned with preparing and presenting accounting information to management to help them plan, control, and make decisions about business operations. What is financial accounting? It is concerned with preparing and presenting accounting information on the performance and financial position of the business. Uh, the comparisons, between management accounting and financial accounting, as far as the users of the information is concerned, the in management accounting, it is the management who uses this information. For financial accounting, it's shareholders, it's banks, it's lenders, suppliers, potential investors, tax authorities, and governments. As far as the format of information is concerned, for management accounting, it can take any form, it can be any format up to the desire of management. As far as financial accounting format is concerned, it is presented and regulated by law and by profession through accounting standards, for example, IFRS. As far as the purpose of information is concerned, for management accounting, the useful to plan, control, and make decision making. For financial accounting, it is stewardship and investment decisions. For the basis of valuation, in management accounting, it is relevant costs, while for financial accounting, it is historical costs. Okay. As far as planning, control, and decision making is concerned, planning, control, and decision making encompasses establishing objectives and evaluating policies and actions required to achieve them. Planning. Now, what is planning? Planning is the setting of goals and the selection of means of achieving these goals. As businesses become large, these procedures need to be formalized. Short term plans, such as annual budget, detail the intended results for the forthcoming year. Okay. As far as the long term plans, also known as strategic plans, are usually documents showing the long term objectives of a business. What is control? Control means checking that an organization is on track to meet its long term and short term objectives and taking actions to correct any deviations from these. Long term control includes strategic performance evaluation, which measures an organization's performance against its strategic objectives. Short term objectives focuses on comparing the budgeted results with actual results. This usually takes the form of an operating statement, which breaks down the difference into parts variances. Okay. What is decision making? Decision making usually involves using the information about the costing systems to make decisions. For example, when an organization decides the appropriate price to charge for the contract they are tendering for, whether it would make financial sense to outcome the production of an essential component. Here is an exam advice for you as well. Traditional costing methods are assume knowledge from management accounting, right? But we'll be doing some of the revision as well. Marginal costing. Under marginal costing, fixed overheads are not included in the unit cost, but are treated as period cost. That is written off in full in the standard of profit or loss in the period they occur. In inventory evaluation includes only the variable cost of production. As far as absorption costing is concerned, under absorption costing, fixed production overhead costs must be allocated, apportioned, and absorbed. Allocation as overcost overhead costs are incurred, they must be allocated to the cost centers to which they belong. Costs related to single cost center are allocated to that cost center. What is cost center? A location, a function, or item of equipment in respect of which cost may be assigned related to cost unit or control purposes. Now, the apportionment. Apportionment is necessary when an overhead is common to multiple cost centers. Such overhead costs must be shared between the relevant cost center using an appropriate method of apportionment. Okay. For example, so far, so good. I hope you get it till here. Now, reapportionment. Overhead apportionment to service cost center must be reapportioned to production cost centers. This is achieved by selecting an appropriate reapportionment basis that would reflect how service depends, support documentation, production departments, common basis use include direct labor hours, machine hours, plan movement, variable overhead utilized, all fixed costs apportioned to service cost centers will be reapportioned to production cost centers for abortion into cost units. As far as absorption is concerned, the total overhead cost in each production department must not be absorbed into the product cost units. This is achieved using one of the following methods: direct labor R rate, direct labor hour rate, direct material cost rate, direct labor cost rate, prime cost percentage rate, machine hours rate, unit of output rate. Okay, now we have here is an example for us. X company estimates that its factory cost for the coming year will be as follows: direct material 40,000, direct wages 60,000, prime cost 100,000, factory overhead 30,000, total factory cost 130,000. During the year, 100,000, 10,000 direct labor hours and 5,000 machine hours are available, and 20,000 units will be produced. We have to calculate the overhead absorption rate using each of the following bases: direct labor hours, direct material cost, direct labor cost, prime cost, machine hours, units of output. Okay, and then B part, management has decided that the absorption rate per machine hour is the most appropriate method of absorbing overheads. One of the products manufactured by X company is the smidget. Each smidget costs 5 per unit in materials and 10 per unit of direct labor. Making a smidget requires half an hour of machine time. Calculate the full absorption cost of one of the unit of smidget. Okay, so far so good. Let's start doing the example now. Okay, overhead absorption rates. Firstly, we has to calculate overhead absorption rates. So first, direct labor hour rate is $3,000 divided by 10,000 hours. It's $3. Direct Material cost rate, dollar 30,000 divided by dollar 40,000, we get 75%. Then direct labor cost rate, dollar 30,000 divided by dollar 60,000, we get 50%. Prime cost percentage rate is dollar 30,000 divided by 5,000 hours is dollar 6. Then unit of output rate is dollar 30,000 divided by 20,000 units. We get dollar 1.50. So far, so good. I hope you get it till here. Now, the requirement B, that is full absorption cost. Full absorption cost, materials, dollar 5, direct labor, dollar 10. So what is the prime cost? Dollar 15. Overhead absorbed, 0.5 machine hours into dollar 6. We get 3. Total absorption cost is 18. So far, so good. I hope you get it till here. So, as you can see, the summary of absorption cost now, the diagrams below depicts the process describing absorption costing, production overheads. Then we will allocate them in department A, department B, and service department and production department D. And then there is the overall production cost, right? As you can see, the way indicators for the allocation, apportionment, and reapportionment, absorption and charging of direct costs over here, right? So far, so good. That is the revision of our traditional costing. I hope you get it. Now, what is activity-based costing? It is an approach to costing and monitoring of activities which involves tracing resources, consumption, and costing final outputs. Resources are assigned to activities and activities to cost objects. The later use cost drivers to attach activity costs to outputs. Okay. Then we have traditional absorption costing uses one method of apportioning all overhead costs between products, typically labor hours or machine hours. Remember, so this blank rate means the product cost may not accurately reflect the true product overhead costs. When overhead costs accounted for only a small portion of total factory costs, this accuracy was not significant. However, in modern factories, service industries, due to the reduction in the amount of labor used and the increase in the amount of high technology, overhead costs are often a significant portion of overall product cost. The inaccuracy of absorption costing is no longer insignificant. Okay. So now activity based costings aims to identify the activities that cause overhead costs to be incurred and to apportion the overhead cost to each product based on the use of the activities by each product. ABC recognizes that traditional ideas of fixed and variable cost categories may not be appropriate as portion overhead cost in manufacturing has increased. There is a need for a more accurate method of absorption these costs into units. It looks for a clearer picture of a cost behavior and a better understanding of what determines the level of cost, that is cost drivers. Okay, so far so good. Now, what is cost driver? It is a factor which can cause a change in the cost of an activity. So, in absorption costing, it is assumed that the volume of output is the factor which determines cost. However, ABC recognizes that the amount of cost may be determined by the factors other than the output volume. These factors are called cost drivers. For example, number of purchase orders process could be the cost driver for a procurement department. An activity could give rise to multiple cost drivers as it consumes different types of overheads. For example, cost drivers associated a production activity may be machine operators or for apportionment of human resources cost, floor space occupied for apportionment of the cost of premises, power consumed as direct overheads, quantity of waste and rejected output for a reapportionment of recycling and quality costs. Therefore, direct overhead cost as absorbed into production units is more appropriate rate based on cost drivers rather than a single absorption rate. For example, particular production department, the following rate may be suitable. That is warehousing cost for kg of material use, electricity cost for the machine hour, production scheduling cost for the product order, production order, etc. So these can be applied and aggregate, calculate and absorption overhead cost per unit as in step 5 of the following section, which we just gonna look at, right? So the steps to find total product costs overheads are traced to individual production department as usual, with common costs being apportioned using suitable basis. Then the following steps are applied. You okay? As you can see over here, identify first step. Step one. Step one, identify major activities with each department which create costs. Examples, production scheduling, machining, dispatching of orders, inspection. Step two, create a cost center, cost pool for each activity. Okay, the activity cost pool for all production scheduling costs, all machining costs, all dispatching costs, all inspection costs. Then we have step three, determine what causes the cost of each activity, the cost driver, number of batch setups for production scheduling, machine hours for machining, number of dispatch orders for dispatching, number of inspections. Okay, step four, calculate an absorption. rate for each cost driver cost per unit of driver, that is it is either batch setup, machine hour, dispatch order, inspection. Then we have step 5, calculate the total overhead cost for manufacturing each product. For example, for product Z, number of batch setups for product Z in multiply by cost per batch setup, number of machine hours for product Z, multiply by the cost per machine hour, number of dispatch orders for product Z, multiply cost per dispatch order, number of inspection for product Z, multiply by cost per inspection. Example, product Z, overhead cost per unit is equal to Y divided by number of Z produced. Identifying and cost drivers in a business enables management to better understand cost behavior. So far, so good. Now we have one more example. As you can see, a company assembled two product models in batches, basic in 2000 units and deluxe in 100 units. Each basic model has 20 components and each deluxe model has 30 components. It takes 5 hours to assemble a basic model and 6 hours to assemble a deluxe model. Okay, 20,000 units of the basic model and 2000 units of a deluxe model are budgeted for the next period. The total fixed overhead budget of 224,000 has been analyzed into three activities and cost drivers identified as follows. Activities per cost pool. We have batch setups. So the cost that is 90,000 and the cost driver will be number of setups. Okay. Then we have stores or material handling. Total is $92,000. The cost driver is number of components. Other rents, etc. 42,000. Cost drivers are labor hours. Number of units of cost drivers. This is our step 3. So basic number of setups. So total setups are 30. Setups required are 30. Calculated as basic is 20,000 divided by 2,000 units. We get 10. For deluxe, 2,000 divided by 100, we got 20. Total are 30. Right? Number of components required 460,000. Calculated basic 20,000. 8 to 20, we got 400,000. Deluxe 2,000 into 30, we got 60,000. Okay. Total components 460,000. Then number of labor hours required are 112,000. Calculated as basic 20,000 into 5, we got 100,000. Deluxe 2,000 into 6, we got 12,000. Cost per unit of cost driver is batch setup cost 90,000 divided by 30, 3,000 per setup. Stores or material handling 92,000 divided by 460,000, 0.20 per component. Other overheads 42,000 divided by 112,000, we got 0.375. I hope you get till here. So total overhead for each product now. We have basic numbers, batch setups. You can see over here. Basic batch setups 10 and 20. So cost we got 3,000, basic 30,000 and 60,000. Stores material handling 400,000 and 60,000. Cost per setup we did the working above 0.20. 80,000 we get 12,000. Other rents 100,000 and 12,000. 0.375. Costs allocated are 337,500 and 4,500. Total overheads are 147,500 and 76,500. Overhead cost per unit, number of products 20,000 and 2,000. We divided how we get it simply by 147,500 divided by 20,000, we get 7.375. Then 76,500 divided by 2,000, we get 38.25. So you can see over here that under traditional absorption costing using labor hours, the overhead cost of the deluxe model would be only 20% more than a basic model. However, ABC approach substantially increases the cost of making a deluxe unit. The setup costs for each batch are spread over fewer units. The effort and cost incurred in producing small batches are now reflected in higher cost per unit. Deluxe cost units should have a higher selling price to justify the higher cost incurred. So far, so good. I hope you get it till here. And here it is another activity. Total budgeted fixed overheads for a company are $712,000. These have traditionally been absorbed on a machine hour basis. The company makes two products, A and B. So direct material cost 20 and $60. Direct labor cost 50 and 40. Machine time 3 hours and 4 hours. Annual output 6,000 and 40,000. The company is considering changing to an ABC system and has analyzed the overhead cost into three activities. The company is considering changing to an ABC system and has analyzed the overhead cost into three activities. Machine related 178,000 cost driver is machine hours. Setup related 230,000 setups. 230,000 is a cost and the cost driver is setups. Machine related is 304,000 and the cost drivers are purchase orders. Total overheads are 712,000. Okay, so far so good. Then we have machine hours per unit product A and B. Product A 3 hours, product B 4 hours. Annual output is 6,000 and 40,000. Total is 46,000. Total machine hours are 18,000 and 160,000. Total is 178,000. Then we have number of setups 16 and 30. Total is 46. Number of purchase order is 52 and 100. Total is 152. Okay, we have to calculate the cost for each product, assuming that the company continues to absorb overheads on a machine hour basis. Calculate the cost per unit using ABC system. Compare the cost per unit of each product using ABC with the cost per unit using absorption costing and identify the main reasons for the differences. Okay, so let us do it. Right, traditional, traditional. Okay, total overheads 712,000. Total machine hours 178,000. So its rate per hour is 712,000 divided by 178,000. We get $4 per hour. So far, so good. So further, we have two products, A and B. Direct material 20 and 60. Direct labor 50 and 40. 3 hours at dollar 4. 12. 4 hours at dollar 4. We get 16. Total is 82 and 116. I hope it's clear till here, right? Uh, we are done with the traditional method. Then move. Then let's start with the ABC. Uh-oh. Sorry. Just a second, folks. Okay, now ABC. So for ABC, it's our activities, machine related, set up related, and purchasing related. Okay. So overheads, firstly, the overheads, and the overheads are 178,000, 230,000, and 304,000. Then we have consumption of activities. We have cost drivers, 178,000 hours. Setup related, we have 46 setups. All I got from questions, right? And purchase related, we have 152 orders. Again from the question. Okay. So now cost per unit of driver. Cost per unit of driver. 178,000 divided by 178,000 hours. We have $1 per hour. Setup related 230,000 overheads, and we have 46 setups. So 230,000 divided by 46 setups, we got $5,000 per setup. Purchase related, we have $304,000 and $152 orders. So we get $2,000 per order. Okay, then cost trades to products. We have product A and product B. For two product A, it's 18,000 and 160,000 on the basis of units, right? 80,000 and 150,000. Lastly, dollar 104,000 and dollar 200,000. Okay. Finally, overhead cost per unit. So to product A, overhead cost per unit, we get 18,000 plus 80,000 plus 104,000. We divide it by 6,000. We get 33.67. To product B, 160,000 plus 150,000 plus 200,000 divided by 40,000 units, we get dollar 12.75. Product A, product B, direct material, we get 20 and 60. Direct labor, 50 and 40. Fixed overhead, 103.67 and 112.75. I hope you get it. So far, so good, right? Um, Now, yeah, for the part C, I'm going down over here in this slide. Yeah. Activity 2, part C. What we will say, what is the heading? Yeah, heading is comparison of cost under ABC and Absorption costing. So, there is a significant difference in the cost per unit of product A when using ABC compared to traditional absorption costing. Under absorption costing, okay, so there is a significant between unit of product A when using ABC compared to traditional absorption costing. Okay, the cost per unit was calculated as $82 under ABC. Under ABC, the cost rose to 103.67, an increase of 26%. Okay, the difference in the cost per unit of product B in the cost per unit of product B is less significant. It falls to 112.75 under ABC compared to 160 under absorption costing, a drop of 3%. So a cost of product A is significantly understated when absorption costing is used. A significant factor in this is setup cost. The total setup costs apportioned to product A were 80,000, equivalent to 13.33 per unit. Product B, by contrast, has total setup cost of 150,000, equivalent to 3.75 per unit. Product A used 16 setups to produce 6,000 units, which is 375 units per setup. And product B used 30 setups to make 40,000 units, achieving an output of 1,333.33 per setup. Okay. So The cost of product A is significantly understated when absorption costing is used. A significant factor in this is setup cost. The total setup cost of $150,000 equivalent to $13.33 per unit. Product B, by contrast, has total setup cost of $150,000, which is equivalent to 3.75 per unit. Product A used 16 setups to produce 6,000 units, which is 375 units per setup. And product B used 30 setups to make 40,000 units, achieving an output of 1,333.33 setups. Now, similarly, in product related cost, product A was 104,000 divided by 6,000 units, we get 17.33 dollar. Okay, and for product B, 200,000 divided by 40,000, it's $5 per Okay, so far so good. And per unit for 400 units of product B, these differences in the use of activities are discussed when absorption costing is used, and all costs are absorbed on a machine hour basis. So far so good. We are done till here, and I hope it is clear to you all. This activity is clear to you all. Now we are moving back. Now, analysis of ABC. Analysis of ABC. The main advantages of ABC is that cost per unit are more accurate as overhead costs are apportioned to product based on their use of the cost drivers rather than using some arbitrary blanket rate as used for absorption costing. This leads to the following benefits. What are those? Better decision making. Companies will have a more accurate knowledge of cost and uh, profit per unit. They can evaluate whether to stop producing loss making products where cost pricing is used. Applying ABC means that price will be more likely to achieve the desired margins. There is a better understanding of what causes cost, resulting from identifying the cost driver. This enables managers to make more informed decisions on actions to reduce costs. As you can see, the example we did in activity two, the cost of product A could be reduced by having fewer production runs. This could be achieved by producing products in larger quantities. For example, making 10,000 units in a production run instead of only 5,000 units. So the control of overheads is more straightforward as the responsibility for incoming costs must be established before ABC can be implemented. More accurate performance measurement leads to better performance management. Then we have some disadvantages. Although ABC provides a more accurate treatment of overheads, it is not without disadvantages. ABC is still based on budgeted overheads in the current period, which may be unsuitable for future strategic decisions. It is more complex. The selection of cost drivers may not be straightforward. Okay, there may be more than one possible cost driver for a particular overhead, so some judgment is required in selecting an appropriate driver. Is not all costs will be easily identified with particular cost pools. Some allocations will be arbitrary. Additional time and cost will be incurred to set up and administer the systems. Now, the comparisons, the difference between traditional methods of absorption costing, overheads, and ABC methods can be summarized as follows. Traditional absorption costing, initial allocation and apportionment of overhead costs to cost centers, while in ABC, initial allocation and apportionment of overheads is to cost pools. Each cost pool represents a particular activity. In traditional absorption costing, absorption of overheads of each cost center is based on the volume of output, for example, number of units or labor hours. As cost may not be depend on volume, some allocations may be inappropriate. In activity-based costing, absorption of overheads of each cost pool is based on driver that causes the cost to vary. Product costs reflect more accurately the activities that cause them. Okay, many different in traditional absorption costing, many different cost types for a particular cost center are included in that department blanket overhead absorption rate. In ABC, that is activity based costing, cost for a particular activity will include only the cost of performing that activity. Then, in traditional methods, since costs are assumed to depend on output, volume limited information is provided to management about ways to reduce costs. In ABC, identification of cost drivers allows management to understand better the causes of cost to find more appropriate ways to control them. Finally, in traditional method, absorption costing is relatively straightforward, whereas in ABC, ABC requires large project to identify activities and drivers, the accounting system may have to be amended or replaced to provide the information needed. So far, so good. Use of ABC in the public sector. In many countries, governments are making greater use of management accounting techniques to allocate government fund more efficiently to areas where they provide the most benefits, reduce the amounts of overall government spending, provide greater transparency so that taxpayers can see where their money is being spent, encouraging public sectors bodies to become more responsive to their customers. ABC is useful in helping public sector bodies assess their service costs more accurately. Public sector resources would be better spent improving frontline services than developing sophisticated accounting techniques such as ABC. For example, hospital operating theater. A hospital needs to monitor the cost per patient, part of this cost of the surgery. Under traditional method, the operating theater might be treated as cost center and absorption cost per minute would be calculated by dividing the total cost of the theater by the total number of minutes budgeted to be available. The cost of an operation would then be calculated by multiply the number of minutes the procedure takes by this absorption rate. Okay. While the problem with this approach is that it is unrealistic to assume that the cost per minute of all operations is the same. Some operations may require several surgeons and medical staff. Others may require just one or two different equipment and different quantities of consumable materials will be used. So, example of activities that could be used for ABC approach to calculating the cost of an operation include, as you can see, preparing the operating theater. Here it is number of operations. The cost of preparing the theater does not vary significantly between different types of operations. Activities of a anesthetist, number of operations calculated separately for those requiring a general anesthetic and those requiring only local anesthetic. Anesthetic drugs, time taking from entering the anesthetic room and until entering the recovery room. Activity of the physician, that is time taking from a initial incision to closure of the incision on completion of surgery. Consumables items during surgery, itemized list of consumables using during surgery, captured by a barcoding device. Overhead activity, that is a charge for management, administration, and staff training. So far, so good. I hope you get it till here. Right now, after that, we'll be doing some exam related questions. Section A, section B questions. So let us dive in into it. So here is a question. A company produces a range of products and uses an absorption costing system. Which two of the following are unlikely to be a consequence of a company switching to a activity-based costing system? Indirect overheads will be shared between products on a fairer basis. Uh, no. Product pricing decisions will be improved. No. The prime production cost of each product will fall. Uh, yeah. Third one is the right. And cost control on indirect overheads will be harder to achieve. So we have to give the two answers. We even do not need to look at the last option, right? Well, ABC does not affect the prime cost of the products. It will, however, give better details on indirect costs, which will be shared between products on a fairer basis, thus impacting on the total product cost of each product and potentially the selling price of each product. This is also likely to make cost control of indirect overheads easier. Then We have the next one, that is a company which makes two products, Alpha and Zeta, uses activity-based costing to absorb its overheads. It has recently identified a new overhead cost pool for inspection costs and has decided that the cost driver is the number of inspections. The following information has been provided. Total inspection cost 250,000, Alpha production volume uh, 2,500 and 8,000, machine hours 1 and 1.5, units per batch 500 and 1,000, inspection per batch 4 and 1. So what is the inspection cost per unit of product Alpha? Select from the list below. So let us do it. Alpha batches 2,500 divided by 500, we get 5. Therefore, inspection required for Alpha, inspection required are 5 multiplied by 4 is 20. Okay. For Zeta, it's 8,000 divided by 1,000. It's 8. And therefore, inspection required are 8 multiplied by 1. So it's 8. Overhead absorption rate is 250,000 divided by 28. We get 8,928.57. So alpha cost per unit is 20 multiplied by 8,928.57. We get divided by 2,500 units, we get 71.43. Right. So this is the right answer, 71.43. I hope you get it. Which of the following statements are true regarding activity-based costing, ABC, and cost drivers? Okay, a cost driver is any factor that causes a change in the cost of activity. For long-term variable overhead cost, the cost driver will be the volume of activity. Traditional absorption costing tends to under allocate overhead cost to low volume products. So 1 and 3, 2 and 3, 1 and 2, no, 1, 2, and 3. All are correct. Statement 1 provides a definition of a cost driver. Cost drivers for a long-term variables. Overhead cost will be the volume of a particular activity to which the cost driver relates. So statement 2 is correct. Statement 3 is also correct that in traditional absorption costing, standard high volume products receives a higher amount of overhead cost than with ABC. ABC allows for the unusually high cost of support activities for low volume products such as relatively higher setup costs or the processing costs and so on. Clear? Then a company makes product A and B. It experiment with the activity-based costing. Production setup costs are 12,000. Total production will be 20,000 units of each product A and B. Each run is 1,000 of A or 5,000 units of B. Using activity-based costing, what is the setup cost per unit of A? Give your answer to the nearest cent. Okay. So just a second. So cost driver, that is number of setups. Okay, cost pool is $12,000. Total setups 20 for A and 4 for B. So total setups are 24. So the rate is 12,000 divided by 24 is 500 per set. Cost for A is 500 multiplied by 20 setups. We get $10,000 per unit. It will be 10,000 divided by 20,000. We get $0.50. And that's the answer. Now, uh, which of the following is a true regarding ABC activity-based costing? Cost pool is an activity which consumes resources and for which overhead costs are identified and allocated. No, it's okay. Yeah, it's right. And any activity, an activity-based costing overhead absorption rate (OAR) is calculating in the same way as absorption costing and will result in the same OAR being calculated for each cost pool. So, statement one is correct. Statement two is incorrect. Although the OAR overhead absorption rate is calculated in the same way as the absorption costing rate, a separate OAR will be calculated for each cost pool. A company uses ABC calculating to calculate the unit cost of its products. The figures for period three are as follows. Production setup costs are $84,000. Total production is 40,000 units of product A and B, and each run is 2,000 units of A or 5,000 units of B. What is the setup cost per unit of B? 2 decibel places. Wow. Let us do it. Cost driver, number of setups. For A, 8 for B, so it's 28. The rate is 84,000 divided by 28. 3,000 per setup. Cost for B, 3,000 multiplied by 8. We get setups. That is 24,000. So per unit, it will be 24,000 divided by 40,000. We get dollar 0.60. Right? So far, so good. Okay, the ABC company manufacture two products alpha and product beta. Both are produced in a very labor-intensive environment and use similar processes. Alpha and beta differ by volume. Differ by volume in a very labor-intensive environment and use similar processes. Alpha and beta differ by volume. Beta is a high-volume product. Alpha is a low-volume product. Details of the product inputs, outputs, and cost of activities are as follows. Alpha, beta direct labor hours per unit 5 each, annual output 1200 and 12,000, number of purchase orders 75 and 85, number of setups 40 and 60, total is 100, fixed overhead cost amount to a total of 420,000 and have been analyzed as follows. Volume related 100,000, purchase related 145,000, setup related 175,000. Using a traditional method of overhead absorption based on labor hours, what is the overhead cost per unit for each product? Alpha to two decimal places. So far, so good. I have to move down for this. Yeah. So it is overhead absorption rate is equal to total overhead divided by total number of direct labor hours. So overhead absorption rate $420,000 divided by 66,000, we get how much? 420,000 divided by 66,000. It's 6.36 per labor hour. Per labor hour, right? And each product requires 5 hours. So 5 hours multiplied by 6.36, 331.82. Wow. Let's move further. So ABC company manufacture two products, alpha and beta. Both are in a very labor-intensive environment using a process. Alpha and beta differ by volume. Beta is a high volume, alpha is a low volume. Details of the product output and cost are as follows. The data is same over here. Okay. Fixed overhead cost amount to 420,000 have been analyzed as follows. Volume related 100,000, purchase related 145,000, setup related 175. Now uses the traditional method of overhead on labor hours. What is the overhead cost per unit for each unit of product beta? Now it requires beta. Okay. We did the working already. It is same as we did above, right? So the both products are the same labor hours we had. And in this case, our answer is C 31.82. Number of overhead absorption. What is the overhead cost per unit for each unit of product alpha? Okay. So let us do it. Yeah, here it is. So, volume related is my heading, purchase related, and setup related is my are my headings. Okay, the cost now 100,000, 145,000, 175,000. Consumption of activities 66,000 labor hours, 160 purchase orders, 100 setups. Okay, uh, then cost per product we have alpha and beta. So 6,000 labor hours and the cost is 9090.91. Right? We have 75 purchase orders. So the cost is 67,968.75. 40 setups cost 70,000. Then we have beta, the product. So 60,000 labor hours and cost is 90,909.9. 85 purchase orders. And so the cost is 77,031.25. Again, 40 setups. Cost is 70,000. 60,085, sorry, 60 setups, and the cost is 105,000. Sorry. So total overhead cost for alpha 9090.91 plus 67 968.75 plus 70,000. We got 147,060, which will be spread over 1,200 units, which will represent 122.5 per unit. So far, so good. I hope you get it till here. Now, company makes two products using the same type of material and skilled workers. The following information is available. Budgeted volume 100,000 and 2,000. Material per unit 10 and 20. Labor per unit 5 and 20. Fixed costs relating to material handling amounting to 100. The cost driver for this cost is the volume of the material purchased. General fixed costs absorbed on the basis of labor hours amounted to on 180,000. Using ABC, what is the total fixed cost amounted to absorbed into the each unit? Okay. So total material budget will be 1,000 units into 10 plus 2,000 units into 20. We get 50,000. Fixed costs related to material handling is 100,000. Overhead absorption rate is of material, okay, $2 per material. Product B, 2 into 20 is $80. Total fixed overhead cost is 40 into 80, we get 120. So far, so good. Now, I hope you get it till here. Uh, Assuming that the company has the number of derivatives as its cost driver, what will be the cost on the cost per unit following the change from absorption costing to activity-based costing? Place a tick in the boxes in the below where appropriate. Product X will increase in this case. Okay. Product Y will also increase in this case, and product Z will decrease. Okay. Since the time per unit is same for each product, the overhead per unit will also be the same. So it is, you can see 156,000 divided by 6,000 is 26. Therefore, the space is less here. So let me see. Uh, Give me the working over here. Yeah, here. What I was saying. Yeah, 156,000 divided by 6,000 is 26 per unit. So as per ABC, for X, number of derivatives are 1,000 divided by 200, we get 5. For Y, it's 2,000 divided by 400, we get 5. For Z, it's 3,000 divided by 1,000, we get 3. So total is 13. So that's how it will done. Uh, I hope you might be tired now. So this is the last question. Uh, Now, by the way, we are done with the questions. And now these are the section B questions which we'll do in another session. Oh, sorry. We can do this question. Yeah. Sorry. So DRP Limited recently introduced an activity-based costing. It manufactures three products. DRP. Okay. Batch size we have here. Machine setup per batch we have it here. Purchase orders per batch we have here. Processing time per unit we have it. So three cost pool have identified their budgeted cost for the year ended 30th June next 3 are as follows: machine setup cost, purchasing of material, processing. So total setup cost is equal to budgeted production divided by batch size multiplied by setup. per batch. So for D, it is 100,000 divided by 100 multiplied by 3, we get 3,000. Okay, for R, we have 100,000 divided by 50 multiplied by 4, we have 8,000. And finally, for P, we have 50,000 divided by 25 multiplied by 6, we have 12,000. Okay, total we get 23,000. So cost per setup is 150,000 divided by 23,000. We get 6.52. So therefore, cost per unit of R. For R, it is 6.52 multiplied by 8,000 setups divided by 100,000 units. We get 0.52. So B is the answer. Now, the section B questions, we are remaining with the remainder are the section B questions, which we will do in another class. Till then, take care. Bye bye.